Accounts Receivable and AFDA Problem 6. The Allowance for Doubtful Accounts AFDA account has a credit balance of $4,000 before the adjusting entry for bad debts expense. The company's management estimates that 4% of net credit sales will be uncollectible for year 4. Net credit sales for the year amounted to $280,000. What is the amount of bad debts expense reported on the income statement for year 4? Another accounts receivable question. Ooh, we got so many of these. Bad debts, accounts receivable, allowance for doubtful accounts. Yes, we know that they can be challenging, but we're managing, we're getting through this. So remember, anytime you have a difficult topic in accounting, first thing to do, take a break, take a breath, relax, look at what it's asking. What is the amount of bad debts expense? So bad debts expense reported on the income statement for year 4. So this is all about not writing off, but estimating bad debts expense for the year. So when we're doing the estimate for writing off bad debts under the allowance method, remember the allowance method is what's required under GAAP. We have the direct write-off method, which we don't estimate. The allowance method we do. And again, the idea of the allowance method, we understand that businesses, they're not going to collect all their accounts receivable from their customers. We just know that some of them, they're just not going to be good customers. They're not going to pay off what they owe. We understand that. When we write it, when we do that estimate at the end of the year, we make a debit to bad debts expense, and we increase the allowance account as needed, unless we have to adjust it down, depending on what it is. Now, this question is all about estimates. We're told about the company's management estimates. And before I even look at going further, I already read the question. Before I look going further, I'm going to tell you that the most common ways to estimate, there's many different ways you can estimate the allowance for doubtful accounts, the bad debts expense for the year. There's many different ways. The two most common are the percent of net sales method and the aging of accounts receivable method. Let's see if either of those is in here. Could be another one, but those are the two major ones you're most likely to see in practice, on an exam, on a certification exam, whatever it is. We're told the company's management estimates that 4% of net credit sales will be uncollectible for the year. So 4% of net credit sales will be uncollectible. So we are using a percent of net credit sales to calculate how much bad debt expense should be recorded. Now, this is really important. Whenever we do percent of net credit sales, step 1, find the percentage. Find that percentage. The percentage here, did you find it? It's 4%. 4%, we have our percentage. Step 2, find net credit sales. So we need to find our net credit sales. These are the sales that are on credit. We're told net credit sales for the year amounted to $280,000. So that equals $280,000. Finally, step 3, take step 1 times step 2, and that equals the bad debt expense for the year, or the amount of allowance for doubtful accounts that it increases by, that we increase the allowance for doubtful accounts. So step 1 was 4%. Step 2 is $280,000. We multiply those two numbers, and we're going to get $11,200. So the answer, what is the amount of bad debts expense reported in the income statement for year 4? $11,200. And we're going to increase allowance for doubtful accounts. That reserve account, that allowance account, is going to increase by that amount. So our bucket increases by that amount. It goes up by that amount. Now, before I conclude this, just note that under this method, the net percentage of net credit sales, under this estimate method, we don't look at what the balance is under AFDA. We ignore the AFDA balance. Now, under the other major method, which you might see in another problem, we look at the AFDA balance to see what's in there in terms of determining what the entry should be for bad debts expense and AFDA. But for this one, for the percent of net credit sales, we ignore the AFDA balance when calculating. You're going to apply these 3 steps in this order to get your answer. No ifs, ands, or buts. You follow those 3 steps and you will get the correct answer. The answer here, the bad debts expense reported on the income statement for year 4 is $11,200.